Hey my Sky Savers, welcome back to my channel, or welcome. I'm Kim and this is World of Sky, a world for women and moms looking to save money and get the most bang for your buck. And today guys, we are talking all about credit cards. Everyone has their opinion on credit cards, right? Some have a good opinion on credit cards, some have a bad opinion on credit cards. Well, in this video today, I'm not going to tell you if they're good or they're bad. We're just going to talk about the facts about credit cards, okay? We're going to discuss the ABCs of credit cards. Before we jump into the nitty-gritty of this video, please make sure that you are subscribed to my channel if you have not done so already. Trust me girl, your purse, your wallet, your bank account, it will thank you. Okay, so here's my PSA. I warned you, I said it here. You must use your credit cards responsibly, okay? You need to use them responsibly for them to be helpful and useful as a part of your financial strategy. I'm gonna say it one more time. Use your credit cards responsibly. Okay, let's go ahead and dive right in. Let's first walk through some general notes about credit cards. The first is that they are an alternative to cash, okay? And they can be much more convenient to carry around than cash would be. The second thing about credit cards is that they help build your credit. This is a big one. So those of you with no credit history at all, this is a great place to start working towards building your history. Using a credit card responsibly can improve your credit score because you are displaying to the lender that you can be responsible with the credit card and they can count on you to repay your debt reliably and on time. But if you go buying a whole bunch of stuff that you can't afford and you can't make the payments on it, that will in turn actually hurt your credit, which then makes borrowing money down the road more expensive and costly for you. So like when you want to buy a home or maybe you want to buy a car, it's going to cost you more if you have poor credit. The third note about credit cards is before you sign up for any credit card, you want to make sure that you have a solid understanding of how credit cards work. I'm going to help you with that in this video. Okay, so now let's go deeper. We're going to talk about what are credit cards and how do they work. Okay, so first things first, what is a credit card, right? So a lender, that could be a bank or a financial institution, offers you access to a line of credit for you to, 1, make purchases, 2, get a cash advance. So a cash advance is like getting money out of an ATM, but the repayment terms are more similar to that of a short-term loan. It's different from just pulling money out of your checking or savings account. And the third thing is to do a balance transfer, which is simply moving your balance from card A to card B, okay? So the lender gives you this line of credit so that you can do one of those three things. Most credit cards have a credit limit, and so that means that is the amount that you can borrow up to. The credit limit is determined by the credit card provider, and they take into account a number of different factors, your income, your credit score, some other things may be included as well. So they will determine what your credit limit is. So your credit limit could be $250, it could be $500, $1,000, $10,000. The limits range, right? And again, they are basing that on your credit history. If you do not have any credit history, don't worry. There are cards out there specifically for individuals like you. Okay, so that was a breakdown of kind of what you can use your card for and what your credit limit is. Now let's talk about what happens when you actually use the card. So each purchase that you make on the card adds to your account balance. So let's say that you buy a pair of shoes that are $50. You also pay your car insurance and that's $100, and then you pick up some groceries and that's $150. Your total balance would be $300, so $50 for the shoes, $100 for the car insurance, and $150 for groceries. Okay, and again, as a reminder, this is not the time for you to be going crazy buying everything that you see because you have a credit card and getting any and everything, okay? It's not the time because guess what? You're gonna have to pay that back. Okay, I got off topic, but like I said, you charge those three things. Your total account balance is $300. Once a month, your lender will send you a statement, or this would be like your credit card bill. Every single month they will send you one. It will detail your account activity, the charges that you've made within that billing cycle. Typically a billing cycle is about 30 days and it can start on any day of the month based on when you applied and received your credit card. So on your statement, you will see your total balance. So you will see that $300. And then you will see an itemized list of all of the things that you purchased in order to get to that $300. So in this example, on the statement, it would say total account balance is $300. And then underneath, it would say that you bought $50 in shoes from, let's say, DSW. You paid your car insurance to State Farm for $100. And you got groceries from Kroger for $150. Okay, so that is kind of how your statement would break down. On your statement, you will also see the minimum amount due. The minimum amount due is the lowest amount that you can pay to keep your account in good standing. Of course, you want to keep your account in good standing, but I would also suggest that you pay more than the minimum payment. My suggestion would be to pay everything off in full every single month. If you pay your balance off in full every single month, you won't be charged any interest, okay? No interest. This is the ideal way to use your credit card. Paying your balance off in full should be feasible for most people if you're not going ham with all of your purchases and you're only buying things that you can afford. It may not be feasible for you to pay it off in full. Let's say that you ran into an emergency one month and you had to put a large charge on your credit card that you didn't have the funds to pay for. That's understandable, right? That happens, that's life. You're not bad with money because of this happens. So in that case, it may take you several months in order to be able to pay that down. But pay over the minimum amount in that case if you can afford to do so. I have had credit cards for years, you guys. I've had them for years and I have paid interest one time. Once. And that is because I forgot to pay the bill. Okay, this was quite a while ago, but I forgot to pay the bill. They charged me interest and I was so upset that I had to pay that interest, okay? But that has never happened to me again. So take a lesson from me and don't do that. Don't forget to pay your credit card bill. So if you find yourself in a situation that you can't pay the balance in full and you can only pay the minimum or any additional amount over the minimum, just know that any unpaid amount of that balance will start to accrue interest. This is what the credit card companies want. It's not what you want, but this is what they want. This is how they make money, is off of interest. So let's talk more about that. But before we do, if you have learned something thus far in this video, please be sure to give this video a thumbs up and also consider subscribing to my channel. Now let's talk about credit card interest rates and fees. Credit card interest rates are called annual percentage rates, or APRs. The higher your APR, the more at risk you are paying more interest. So someone with an APR of 22% would pay more interest than someone with an APR of 14% for that same $300 balance, okay? So the higher the APR, the more interest you will repay. Also know that your APR can change through the life of you having that specific credit card. It can change because the lender had just decided to change your APR, okay? They do have to let you know that in writing, so look out if you get anything in the mail from your credit card company. It may be letting you know that your APR is changing. They can also change your APR based on your activity history. So for example, if you fall behind on payments, the credit card issuer could now charge you a higher interest rate called a penalty APR. They can also charge you penalty fees or late fees associated with your account with you not making payments. Okay, so you can see how using your card irresponsibly or not making your payments can really be bad. It can get out of control very quickly. So you want to be mindful when you are making purchases that you are only buying things that you can afford. I can't say that enough. I'm going to continue to say it because I want it to stick. There are also other fees associated with credit cards. The fees vary by the card issuer as well as the individual card holder. The first type of fee is annual fees. These are fees that you get charged every single year simply for having that credit card. These tend to come with cards that have a higher credit limit or the cards that have a ton of different perks and benefits associated with them. Typically, those type of cards have an annual fee that you must pay in order to keep the card. As a beginner, aim for cards that do not have an annual fee. There are tons out there. I have, like I said, several credit cards. I only have one that has an annual fee. The rest of them have no fee. So that is what I suggest for most people, beginners or not. Try to get cards that do not have an annual fee but still have a ton of perks and benefits associated with that card. The second type of fee is cash advance fees. So these are fees for using an ATM to take out cash advance, right? The fees associated with cash advances are typically quite high. So use this as a last resort. If you need cash quickly and you don't have any other option, use it, but just know it's going to be quite expensive to repay back. The third fee is a balance transfer fee. And a balance transfer is just when you transfer the balance from one card to another. They will charge you an actual fee to complete that process. And again, the fees vary based on the card issuer, how much you're transferring, things of that nature. And the last fee is a foreign transaction fee. If you are using your credit card in a foreign country, you may get charged fees for that. if that is something that is not included in your credit card agreement. Okay, so that is a little bit about fees. Let's talk about how your credit is impacted by your credit cards. The way you use your credit card will reflect on your credit report. Like I said before, using your credit card responsibly and not overspending and paying your balance off in full every single month can boost your credit score. On the other hand, overspending, using up your credit card to the credit limit, or making late payments can contribute to lowering your score. Okay, so responsible use results in increasing your credit score. Irresponsible usage results in bringing your credit score down. In the credit world, there's a thing called revolving credit, and credit cards fall under this category, which means as long as you at least make your monthly minimum payment and you don't let your balance go over the limit, you can borrow with that card time and time again, okay? Okay, so that's how your credit cards can impact your credit. Super, super important information to know. Now, lastly, let's talk about the difference between credit cards and debit cards. But I will have more videos coming up about credit cards, so the different types of credit cards, how you can make money with your credit card, best credit cards for people with bad credit, credit card benefits and risks, a lot of information about credit cards. So keep your eyes open for those. Make sure that you are subscribed, hit the notification bell, and then you will be notified when those videos are published. Lastly, let's jump into credit cards versus debit cards. Unlike credit cards, which don't draw directly from your checking or savings account, a debit card does pull funds immediately from your checking or your savings account that you have the card linked to. Because the debit card pulls money directly out of your account in which you already have money in, because you're not borrowing money like a credit card, you're not charged any interest when you use your debit card. Again, with a debit card, the money is coming right out of your account. Also, debit card usage does not contribute to your credit history one way or the other. It's not a type of credit, therefore it does not reflect on your credit report. Now, misusing and abusing your debit card can result in some financial implications with the bank itself, but it's not going to reflect on your credit report. Credit cards and debit cards also differ in the amount of fraud protection that they offer you. If someone steals your credit card and makes purchases on that credit card, you won't be responsible for most of that fraudulent activity, and there are actually a lot of card issuers that will not even charge you a penny of that, okay? However, on the flip side, if someone fraudulently uses your debit card, your losses from fraud are capped and you have to alert the bank within a certain number of days. You may even have to open an investigation and you would not have access to those funds while your account is being investigated. So this alone is one main reason that I opt to use my credit card over my debit card in most situations. I just feel better protected that way. Okay, so those are the major differences between the two types of cards, the credit card versus the debit card. Now that you have watched this entire video, you are informed of what a credit card is, how it works, fees that are associated with credit cards, as well as how they differ from debit cards. I hope that you have learned something that is very, very helpful. Before you go, please make sure that you do subscribe to my channel. I post new videos every single week, and they are pertaining to saving you money in some fashion. That is it for now. Thank you so much for watching. I appreciate you, and I will see you in my next video. Happy saving!